Good afternoon, everyone. This is Michelle Bowman with Allen Tate Realtors, and this is 3 on Thursday. 3 on Thursday will be a monthly, possibly bi-weekly video series where I sit with some of my vendors in the real estate industry and we have a conversation. We're going to focus on 3 burning questions that are trending or informative in the real estate industry. This is the very first 3 on Thursday, and I'd like to introduce my longtime friend and lender of 20 years, Tammy Smith with Union Home Mortgage. Hey, Tammy, and thank you for being here.
Okay, thank you for inviting me.
Great.
Thanks.
So I think we can just jump right in,
Okay.
and I want to ask the big question of the year, and that's what all the sellers and all the buyers are talking about. What is the rate?
Okay.
Can you tell us a little bit about that?
Well, of course, the rates, they were really, really low about a year and a half ago, and they got down as low as, like below 3%, but now they're back up over 6%. But as far as quoting a rate, lots of times someone will call and they'll ask, what's the rate? Well, the rate is not that simple. There's a lot of factors that go into the rate. Your purchase price and your loan amount, which comes out to your loan to value, LTV for abbreviation. It also has the rate is affected by the type of loan, your credit score, whether it's a primary home, a second home, or an investment home.
Wow, so there's a whole lot.
There's a lot of factors, and you just can't say, oh, what's your rate? Because it's like, I got to get more information.
And everybody seems to think right now they could just say, well, what's the rate today?
Right. And it depends on how much money they got to put down, and it depends on what their credit score is. And, there's a lot of factors. So it's not that simple. But
right. The best thing they could do is reach out to you.
Yeah. But once I get, more information about what they're wanting to buy, how much they got to put down, then I can quote a rate.
Okay. All right.
Okay.
The next question is, what type of loans are there for primary residence?
Okay. Primary residence, there's conventional, FHA, USDA, VA, and a jumbo. And I'd like to elaborate on that a little more. So a conventional loan actually goes up to $726,200. That's your conventional loan limit. A jumbo is a loan over that amount, $726,200. And then the FHA, it also has a loan limit. That loan limit is $472,030. And then USDA is 100% financing, and they're really strict on their debt ratios. And we can talk about that a little bit more. And then the VA, that's 100% financing too. And then you also have down payment assistance that you can apply on all the products, conventional, VA, USDA, FHA.
So let me ask another question then. Maybe we can do a follow-up video talking about the loan programs and what it takes for each of them loan programs, to dig a little deeper into that in another video.
Correct. Like, we're just touching the basic top questions,
Right.
So just kind of putting the icing on the cake right now.
Right.
And then
we'll deep dive as we get on into this.
We will.
Yeah. So how do you determine what type of loan to use?
Okay. So the way I determine what type of loan is best for the customer, I get all their information. I pull their credit, and as I'm working, I'm looking at their debt ratio. I'm getting their income, and their credit has the credit score has a big play in what type of loan is best for people. So the conventional loan, I have found over many, many years of experience, and still today, I will still try to compare a conventional loan with an FHA loan and see if I can get it approved on a conventional loan, because that really, the conventional loan is your first choice if somebody can qualify for it. But I find through experience that a conventional loan, it's hard to get an approval when the score is under 680. So when your score is under 680, FHA always comes out better. And the reasons why it comes out better, the rate ends up being a little bit better. The PMI is less on an FHA loan than it is on a conventional. Those things are very surprising. You don't hear very many loan officers talking about it. But I really put a lot of effort into it, and that's the details that I have found. So the USDA loan goes down to 620, but again, it's hard to get an approval when the score is under 640. USDA loan uses a different underwriting system than the conventional FHA. It's called GUS, and you have to put all the criteria in and run it on that. And you can't really run it until you have a property address in that system. So lots of times on a USDA, it's not good to take a risk of making an offer if your score is under 640. And your debt ratios on the USDA is 2941, and they are very, very strict. And so if your debt ratios varies from the 2941, it's not good to take the risk to give an approval unless you've really run it on the system. FHA, they basically go down to 580 credit score, but I always recommend shooting for the magic score is a 640, and the magic score for conventional is a 680. So, and the VA, it really depends on the lender. VA loan, you could go down to a very low score. So, but a lot of lenders have a cap on the score. So a lot of times it's 620.
That's the cap for the VA loan. Yeah.
Good margin. Yeah.
Yeah.
So one thing I would like to talk about, it came up today, the FHA.
Okay.
They just announced that on or after March 20th, the MIP or the PMI is being reduced from 0.85% to 0.55%, which will lower the house payment for borrowers. That's a huge improvement on the FHA. An example is a $265,000 mortgage. A borrower will save up to $800 in a year just because the PMI on the FHA loan is going to be less.
Right.
So, again, a lot of people think FHA is not a good loan. It's a great loan. And having this improvement in the PMI is really going to be very beneficial to all of us.
Right. I can add that from my perspective, I have the buyers that come to me and they're shopping from payment. They're not, it's not
really paying attention to the
right.
rate.
They don't really care how much they can spend up to. They're looking for payment.
Well, the rates, we've really been in a really a beneficial or really good past environment, with the rates being so low, but really the rates between 6 and 7% is really not that bad of a rate.
No.
They used to be that several years ago. It hasn't really been that long ago.
Right. When I first got into real estate, they were higher. They were 7 and up.
Oh yeah, they were.
Yeah.
So today is a good buy. It's good to buy a house. It's still cheaper than renting. And I know housing inventory. I think the housing inventory is improving a little bit.
It is, but it's still very low.
Yeah, we're approaching spring, which is the busiest time of the year, and we're just, we're here to pre-qualify you and help you get in that house instead of spending and wasting your money on rent. So,
right. One thing that I have been telling people is date the rate, marry the house. So if you find the house that you love, buy the house and get in it. And, if it's a high rate, okay, take that rate and then refinance it in a year.
Yeah, just like, if you're just think about it. If your rent is $1,000 in 1 year, you've wasted $12,000.
$12,000 wasted.
And with the down payment assistance of $8,000 that we can use to pay your closing costs and some on down payment if the closing costs don't exceed $8,000, you're really smarter to buy than to keep renting.
Yeah, I agree.
Yeah.
Well, this has been a lot of great information, and this has been a great first 3 on Thursday. I'm excited to keep this video series up. Tammy's going to continue to join me on a regular basis. I don't
I'd love to.
Okay. So any of your burning lender questions, send them to me, and we'll possibly include them in future 3 on Thursdays.
Yeah, and as new things develop in the mortgage industry, just like the FHA topic just came up actually yesterday, we're going to bring them to you live.
Right.
So,
very good. All right, Tammy, thank you so much. If any of you are interested in speaking to Tammy, Tammy is with Union Home Mortgage, and I'm going to include all of her contact information in the video description below.
Okay, great.
All right.
Thank you.
Thank you so much. This is exciting.
I know.
I'm excited, y'all.
Yeah.
All right, y'all take care. I'll talk to you soon.
Bye.
Bye.